Okay, so we're diving into this thing, right? This thing we all think about, money, but maybe not in the way we should. The psychology of money. We've got Morgan Housel's book, The Psychology of Money. It's our
Yeah.
guide today.
Great book.
Oh, it is fantastic. And believe me, this is not your typical,
No.
budget better, pick stocks
Right.
kind of financial advice.
This is about the mental game, isn't it?
Yeah, yeah.
Yeah, the book really digs into how our decisions, even the seemingly irrational ones,
Yeah.
they're really deeply rooted in our personal experiences.
Yeah, it's so true. Like the book opens with this story about Ronald Reed,
Yeah.
a janitor, right, who quietly built an $8 million fortune.
Yeah.
I mean, if a janitor can do that,
Mhm.
it really makes you question what's truly driving financial success. It's
Yeah.
like, what are we all doing wrong?
Well, his story is so fascinating because he didn't use any complex strategy.
Hey,
He just saved consistently, invested in solid companies, and let time and compounding do their work. It really highlights how patience and consistency, maybe even more than brilliance, play a huge role.
right. It's not about being the smartest guy in the room. It's just about
No.
being consistent. Think about that for a second.
Yeah.
How often are we like running around trying to chase the hot stock tip or the quick win?
Yeah.
When maybe what we really need is just good old-fashioned patience.
And it's a powerful lesson. And it leads to another key point in the book.
Yeah.
Getting rich and staying rich
Yes.
require different skills. We hear those stories all the time about lottery winners going broke or successful entrepreneurs losing it all.
Right?
It's clear there's more to the money game than just accumulating wealth.
Right. It's not just about getting it, it's about keeping it.
Mhm.
The book contrasts Jesse Livermore,
Yeah.
wildly successful stock trader, with Abraham Jermansky, a real estate mogul.
Mhm.
Both made fortunes, right?
Yep.
But eventually lost everything. Livermore, tragically, took his own life.
Yeah.
And Jermansky vanished after the 1929 crash. I mean, talk about like boom and bust. It makes you realize that holding on to wealth requires a whole other level of discipline and understanding.
Absolutely. The book suggests that financial fragility comes from things like overconfidence, taking on too much debt, and that urge to panic sell when the market dips. Have you ever felt that, like the urge to sell everything
yeah.
when things are going down?
Oh my gosh, yes.
Even though you logically know it might not be
It's
that.
like all logic goes out the window and suddenly it's like, get me out, get me out, get me out.
Yeah, exactly.
Oh yeah. The book also talks about Rick Guerin,
Yeah.
who was part of Warren Buffett's inner circle. He was a skilled investor,
Yeah.
but unlike Buffett, he couldn't withstand market downturns because he used too much leverage.
Right. Guerin's story highlights the importance of survival in the financial world.
Yeah.
It's not always about aiming for those highest returns, but rather just staying in the game long enough to let those returns compound over time.
Right. Staying power. Don't tap out early. And that brings us to another interesting concept. Compounding.
Yes.
It's one of those things that we hear about all the time in finance, but the book uses kind of a surprising example to
Yeah.
illustrate its power.
What's that?
Ice ages.
Ice ages, yeah.
Ice ages.
It might seem like a random connection, but think about it. How does a little bit of snow that doesn't melt in the summer eventually turn into these massive, miles-thick
Right.
ice sheets?
Yeah.
It's the same principle with investments. Small, consistent contributions compounded over decades can grow into significant wealth.
It's like that snowball effect.
Exactly.
Right. Like it starts small, but as it rolls, it picks up more and more snow, getting bigger and bigger over time.
Exactly, yeah. Warren Buffett, for example, is undeniably a skilled investor, but a huge part of his wealth comes from the fact that he's been investing consistently for over 70 years.
It's
How
incredible.
about that?
Yeah.
Most of his wealth was actually accumulated after he turned 50.
Oh, wow.
That's incredible.
So it really is about playing the long game and letting that snowball effect work its magic. But the book also brings up another interesting comparison.
Okay.
Warren Buffett and Jim Simons.
Yes.
Simons is known for generating amazingly high annual returns, even higher than Buffett's average.
Right.
But here's the catch. Despite these superior investing skills,
Yeah.
Simons has far less wealth than Buffett. Why?
Because he started investing later in life.
Ah.
Even with incredible returns, that early start Buffett had
Right.
makes a world of difference. It just shows, even if you're a brilliant investor,
Yeah.
the power of compounding really favors those who start early.
Okay, I'm really seeing how time is the secret sauce here.
It is.
But how do we apply this to our own lives? I
Yeah.
mean, not all of us are going to be Warren Buffett.
You don't have to be Warren Buffett to benefit from these principles. The key takeaways are consistency and patience. Start investing as early as you can, even if it's small amounts. Don't get discouraged if you don't see huge returns right away.
Yeah.
Time is your most valuable asset in this game.
That makes a lot of sense. But here's a question that keeps popping up for me.
Okay.
How much is enough?
Enough.
At what point do we stop chasing more wealth?
That's such an important question, and one the book tackles head on with this concept of enough. It's not about reaching a specific dollar amount. It's understanding when the relentless pursuit of wealth starts to actually work against you.
It's like, when does wanting more become detrimental to our well-being, both financially and emotionally?
Exactly, yeah. The book shares the story of Rajat Gupta, a massively successful businessman worth over $100 million.
Wow.
But despite having enough by any standard,
Right.
he engaged in insider trading, risking everything to try to become a billionaire.
So even with extreme wealth, that feeling of enough can be so elusive. It makes you wonder how societal pressures and that constant comparison game play into this. I mean, have you ever noticed how it seems like everyone's always comparing themselves to someone wealthier? Like, no matter where you are on the spectrum, there's always somebody
Always someone, yeah.
doing better.
The book highlights this, even using examples of athletes and billionaires who constantly compare themselves to those who have even more.
Yeah.
It's like a never-ending cycle of wanting more. And that's why this concept of enough is so crucial to finding true financial and personal contentment.
So it's like we need to define what enough means for us, not based on what society's telling us or what other people are doing, but based on like our own values and our own, internal compass.
Aligning our financial goals with our personal values and creating a sense of contentment that comes from within, not from these external comparisons.
I love that. Okay, so we've covered like time, compounding, and the importance of enough. But there's another idea in the book that I found kind of intriguing.
Okay.
Maybe it's okay to not be perfectly rational.
Yeah, we are fighting all the time.
Right. The book introduces this idea of reasonable decision-making,
Okay.
which acknowledges that we're human. We're not robots.
Mm-hmm.
We have emotions and biases and limitations.
Yeah.
Sometimes those lead us to make choices that, they aren't perfectly rational, but they are reasonable within our own personal context. Think about it. Have you ever made a money decision that, looking back, you're like, well, that wasn't the most logical choice, but
Oh, yeah, for sure.
it felt right based on your circumstances and your feelings at the time?
Oh, all the time.
Yeah, yeah.
Definitely. It's like sometimes our gut feeling outweighs the purely logical approach. But how do we tell the difference between a reasonable decision and just letting our emotions completely cloud our judgment?
That's the key, isn't it? Finding that balance.
Yeah.
The book gives this great example of Julius Wagner Jurek, a doctor who won a Nobel Prize for using fever to treat syphilis. Now, inducing a fever might seem counterintuitive, maybe even dangerous. But back then, with limited medical knowledge,
Right.
it was a reasonable approach that actually saved lives.
So it's about understanding the context
Right.
and acknowledging that sometimes even in fields like medicine, what's perfectly rational
Right.
might not actually be the best option.
Not exactly. In practice. Yeah, in practice.
Yeah.
And this applies to investing, too. Sticking to a plan, even if it's not perfectly optimized, often leads to better long-term outcomes than constantly chasing that rational choice.
So having like a good plan,
Yeah.
even if it's not perfect,
Yeah.
and being able to stick with it is more important than
Right.
constantly like tweaking and second guessing yourself.
Right.
Right.
The book gives some examples of how this reasonable approach can benefit investors. Think about having a home bias in your investments. Maybe you feel more comfortable investing in companies, from your own country, even if it's not statistically.
The most diversified approach. Or maybe you allocate a small portion of your portfolio
Yeah.
to individual stocks, even though index funds are statistically more optimal,
Right.
simply because you enjoy researching companies and picking stocks.
Yeah, sometimes it's just about the fun of it. So it's about finding that balance between what's technically correct
Yeah.
and what actually works for you on a personal level,
Right.
acknowledging that we all have different comfort levels and emotional responses to money.
Absolutely.
It's gonna be okay.
The beauty of this reasonable approach is that it lets us personalize our financial decisions, taking into account our emotions, our preferences, even our quirks.
Yeah,
It's about finding a financial approach that feels authentic to who we are.
I love that. This is really making me rethink how I approach money. It's not just about the numbers, it's about understanding myself and my own psychology. But there's another psychological quirk that the book talks about that I think we all struggle with, our tendency to overestimate risks and get caught up in negativity, especially when it comes to finances. Have you ever noticed how easy it is to get sucked into that vortex of like doom and gloom financial news?
Oh, absolutely. The book explores this idea of the seduction of pessimism.
Yeah.
It's like pessimism, especially in finance, often feels more intellectually rigorous, more credible
Mm-hmm.
than optimism. We tend to give more weight to negative news, even when it's not necessarily warranted.
It's funny because the book talks about how the media initially reacted to the Wright brothers' invention of the airplane.
Yes.
Despite being, a groundbreaking invention, it was met with skepticism and disinterest. It took years for people to understand the significance of what they'd achieved.
Right. And even groundbreaking innovations can be overlooked or dismissed because they challenge our existing pessimistic narratives. And I think this is especially true in finance. We tend to overestimate the likelihood of these negative events, like market crashes,
Right.
which can lead to being overly cautious and missing out on opportunities.
So how do we counteract that negativity bias
Yeah.
and make more balanced financial decisions?
Awareness is key.
Yeah.
Recognize that our brains are naturally wired to pay more attention to negative information.
Right.
Actively seek out positive and balanced perspectives.
Yeah.
And remember, history has shown us time and again that, in the long run, things tend to get better,
Yeah.
even after setbacks.
That's reassuring. But the book goes even deeper, suggesting that our personal experiences and limited worldview can actually distort our understanding of the world, leading to all sorts of biases and misunderstanding.
Right. We all view the world through our own unique lens, shaped by our experiences and beliefs. And it's easy to forget that our perspective is just one of many. And this can lead to what the book calls appealing fictions.
Yeah.
We cling to these narratives that confirm our existing beliefs, even if they're not entirely accurate.
Right. It's like we create these stories to make sense of the world,
Yeah.
even when we don't have all the information. The book uses this example of the author's young daughter,
Yeah.
who is constantly coming up with explanations for the world around her.
Yeah.
Even though she doesn't have the knowledge or context to fully understand it. It shows how natural it is for us to try to connect the dots,
Yeah.
even when we're missing pieces of the puzzle.
Yeah. Exactly. And this tendency can really trip us up when it comes to finance. Incomplete information combined with that herd mentality, following the crowd, can lead to overconfidence and some pretty costly mistakes.
It reminds me of the Bernie Madoff Ponzi scheme.
Oh, yeah.
He managed to fool so many sophisticated investors
Yeah.
because he told this compelling story
Yeah.
that confirmed their belief that, achieving these consistently high returns was possible.
Yeah. They wanted to believe it.
They wanted to believe it, even though looking back, it's there were these red flags
Totally.
that should have made them suspicious.
Yeah. It shows how these appealing fictions can be so seductive, especially when they tap into our desires and fears.
Yeah. So how do we avoid falling prey to these narratives and make more informed financial decisions?
It comes back to self-awareness.
Yeah.
Recognize that we all have these blind spots and biases.
Yeah.
Be willing to question our assumptions. Seek out diverse perspectives to challenge our own views. And most importantly, be willing to change our minds when presented with new information.
So recognizing that everybody is kind of playing their own game with their own rules and time horizons is really crucial. We need to be aware of that, not just in other people,
Yes,
but in ourselves.
absolutely. And the book actually recommends writing down your personal investment philosophy, your goals, time horizon, risk tolerance to help you stay focused on your own game.
So it's creating your own personal compass to navigate the, often turbulent waters of finance.
Exactly, because when we're clear on our own goals and values, we're less likely to be swayed by the actions or opinions of others.
Right. Okay, I'm really starting to see how self-awareness is so crucial in this whole money game. It's not just about understanding the numbers. It's about understanding ourselves.
It's the key takeaway, isn't it? Financial success isn't just about the technical stuff. It's about mastering our own psychology, understanding our emotions, our biases, our narratives, It's about aligning our financial decisions with our personal values and creating a financial life that feels authentic to who we are.
Well, that is some serious food for thought. But there's so much more to unpack in this book.
We've only just begun to scratch the surface.
Stay tuned for part 2 of our deep dive into the psychology of money, where we'll delve even deeper into the often overlooked but incredibly powerful forces that shape our financial lives. Welcome back. I don't know about you, but after that last discussion, I'm looking at my finances in a whole new light. We're diving back into the psychology of money. And in this part, I'm really curious to explore how all these psychological quirks we've talked about play out in those kind of crazy periods of like market exuberance, like financial bubbles.
Yeah.
We hear about them. They always seem to end badly.
Bubbles are fascinating.
They are fascinating.
Yeah. It's like logic goes completely out the window and everybody gets swept up in the frenzy. But what's really interesting is what the book says about the psychology behind those bubbles. It's not just about greed like a lot of people assume.
Right. It's easy to like label everybody as greedy or irrational, but is it really that simple?
Not really. The book digs into this idea that people make financial decisions they later regret. But at the time, those decisions made perfect sense to them based on their own experiences and what everybody else seemed to be doing.
So it's more about like how we perceive the situation and the stories we tell ourselves than just pure greed.
Exactly. The book talks about how investors often have different goals and time horizons, which means, what looks like a ridiculously overpriced asset to one person might make perfect sense to someone else.
Okay.
Think about those day traders who are only looking for a quick profit.
Right.
They might be willing to pay a premium for a volatile stock.
Yeah.
Because they're betting on a short-term price swing. But to a long-term investor, that same price might seem absurdly high.
So depending on who's buying and why, the right price for an asset can vary, like wildly.
Absolutely. And when you have all these people with different goals and time horizons competing for the same assets, it can create this gap between the actual value of something and the price people are willing to pay for it.
And that gap is what fuels the bubble.
It's a big part of it, yeah. But then you add in social proof, that powerful human tendency to follow the crowd.
Yeah.
When we see everyone around us buying something, our instinct is to assume that they know something we don't.
It's like that fear of missing out.
Yeah.
FOMO.
Right. Like nobody wants to be the only one left out when everyone else seems to be getting rich.
Exactly. And that herd mentality gets amplified by the media, hyping up the latest trends. And then suddenly everyone's jumping on the bandwagon, not because they believe in the underlying fundamentals, but because they're afraid of being left behind.
It's almost like a self-fulfilling prophecy.
Yeah.
The more people buy into the hype, the higher the prices go, which only reinforces this belief that it's a can't-miss opportunity. Exactly. And then you add in the power of narratives.
Right.
We humans are storytelling creatures.
Oh, wait.
We create stories to make sense of the world. And those stories have a huge influence on our financial decisions.
So the stories we tell ourselves about the economy or about a particular company or investment can actually like shape how we invest.
Absolutely. And during bubbles, those narratives often become completely detached from reality.
Yeah.
We convince ourselves that this time is different, that the old rules don't apply, and the prices will just keep going up forever.
It's like we suspend disbelief because we want to believe the story so badly.
Yeah.
But then when that bubble bursts, like reality comes crashing down.
Yeah.
And the consequences can be devastating.
And the pain isn't just financial.
No.
It's emotional too. When we lose money, it's not just about the dollars and cents.
Right.
It's about that feeling of having made a mistake, of having been fooled, or even having let ourselves down.
Right. Those feelings can really linger.
They can.
Yeah.
And they can make us more risk averse in the future.
Right.
Even when taking, calculated risks might be the right move.
So how do we like protect ourselves from that emotional fallout of a bubble?
Yeah.
Or any financial setback for that matter?
Well, the book emphasizes a few things. First, being aware of the psychological forces that drive bubbles.
Yeah.
The more we understand those forces, the better equipped we are to recognize them when they're happening and make more informed decisions.
So knowledge is power.
Absolutely.
Yeah.
The book also talks about diversification, not putting all your eggs in one basket.
Yeah.
And perhaps most importantly, remembering that even the smartest investors make mistakes.
So it's about managing risk being prepared for those inevitable ups and downs,
Yeah.
and not beating ourselves up when things don't go as planned.
Exactly, yeah.
Yeah.
And the book also highlights the importance of humility in investing, recognizing that we don't have all the answers, that we're going to be wrong sometimes,
Yeah.
and that luck plays a role in both success
Yeah.
and failure.
Humility.
Yeah.
That's not a word you hear very often.
I know, right?
In the financial world.
It's often seen as a weakness,
Yeah.
but the book argues that it's actually a strength,
Okay.
especially when it comes to money.
Right.
Having a bit of humility can help us avoid overconfidence, make better decisions,
Yeah.
and be more resilient when we face setbacks.
I love that. Humility as like a superpower. Okay, but let's shift gears a bit and talk about another key theme in the book, the power of stories. I know we talked about it earlier in the context of bubbles,
Yeah.
but it seems like stories play a much broader role
Yeah.
in how we think about and manage money.
They absolutely do.
Yeah.
The book argues that we each view the world through our own unique lens, and that lens is shaped by our experiences, our beliefs, and the stories we tell ourselves. And those stories can have a profound impact on our financial decisions.
So it's almost like our personal narratives create our financial reality.
In a way, yeah.
Yeah.
If we tell ourselves we're bad with money,
Right.
or that investing is too risky, those beliefs can become self-fulfilling prophecies.
Yeah.
We might avoid taking risks that could benefit us,
Yeah.
or we might sabotage our own efforts
Right.
to save or invest.
So if we're telling ourselves negative stories about money, it's like we're setting ourselves up for failure.
It can definitely work against us, yeah.
Yeah.
But the good news is
Okay.
we can change those stories. We can choose to tell ourselves more empowering narratives,
Right.
stories that support our financial goals.
So it's about becoming aware of the stories we're telling ourselves.
Yes.
And then actively choosing to tell different stories. Stories that align with our goals and aspirations.
Exactly. The book encourages us to examine the narratives that shape our financial lives,
Okay.
where those narratives came from,
Yeah.
whether they're actually serving us,
Yeah.
and how we might rewrite them
Yeah.
to create a more positive and abundant future.
It's like taking back control of our financial narrative.
Exactly, yeah. Because ultimately, the stories we tell ourselves about money often have more influence than the actual numbers
Right.
in our bank account.
Right, because those stories shape our behaviors,
Yeah,
which ultimately lead to our financial outcomes.
exactly.
Yeah.
And that brings us back to this idea of being rational versus being reasonable,
Right.
a distinction that is so subtle, but so important.
And have to admit, I'm still a little bit fuzzy on the difference.
Okay.
It's not just about being logical, right?
Being rational implies making decisions based purely on logic and objective data, ignoring those emotions
Yeah.
and biases.
Yeah.
But that's just not realistic for most of us.
We're human.
We're human. We have feelings,
Yeah.
and those feelings inevitably come into play
Right.
when we're making decisions, especially about something as emotionally charged as money.
So being reasonable is more about acknowledging our humanness.
Yeah.
Finding a balance between like logic and emotion.
Exactly. It's about finding that middle ground
Yeah.
between hard data
Mhm.
and our own personal experiences and intuition.
Yeah.
It's about making choices that make sense within our unique context, even if they're not perfectly optimal
Right.
from a purely rational standpoint.
Is there like an example from the book that illustrates this?
There is.
Yeah.
It talks about a study that found that most people, even those with a deep understanding of finance,
Okay.
don't actually invest their own money in a perfectly rational way.
Really? Why not?
Because, again, they're human.
Yeah.
They have emotions,
Right.
biases, attachments that influence their decisions.
Okay.
The book talks about the home bias, where people tend to favor investing in companies from their own country, even if it might not be the most diversified approach.
So it's about trusting our gut sometimes, even when it contradicts what the data might be telling us.
It's more nuanced than that. It's not about blindly trusting our gut,
Right.
but it's about recognizing that our intuition
Yeah.
and our personal experiences are valuable pieces of information too.
Right.
Sometimes our gut feeling is signaling something important
Okay.
that the data alone might miss.
So it's about finding that sweet spot
Right on.
between what our head tells us
Yeah.
and what our gut tells us.
Exactly.
Yeah.
And the book argues that this reasonable approach is often more sustainable in the long run.
Right.
It allows us to make decisions that we can actually stick with
Yeah.
even when the market gets volatile
Yeah.
or our emotions are running high.
Because if we're constantly fighting against our own instincts
Yeah.
or second-guessing ourselves, it's going to be much harder to stay committed to those financial goals.
Right. It's about finding a financial approach that aligns with our values, our personality, our risk tolerance, all those things that make us unique.
This is making me think about those times I've tried to follow, like, a financial plan
Yeah.
that just didn't feel right for me,
Mm.
even if it was, like, technically sound.
Yeah.
And I'd always end up abandoning it because it wasn't sustainable.
That's a perfect example of how this reasonable approach can play out in real life.
Yeah.
It's not about following a rigid set of rules. It's about finding an approach that feels authentic and sustainable for you.
I like that.
Yeah.
Okay. But let's talk about something that often triggers a lot of anxiety for people. Financial risk.
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 It's a natural part of life, and it's definitely a part of the financial world. But the book challenges us to kind of rethink how we view risk. Instead of seeing it as something to be avoided at all costs, maybe we need to think about, managing it and even embracing it to some degree.
Embracing risk.
Yeah.
That sounds a little bit scary when we're talking about something as important as our money.
It's not about being reckless or taking unnecessary risks. It's about understanding that risk and reward are two sides of the same coin. If we want the possibility of those higher returns, we have to be willing to accept some level of risk.
So it's about finding that balance between risk and reward.
Exactly. And the book argues that the key is to take risks that we can afford to take.
Yeah.
Risks that won't derail our financial goals.
Right.
Even if they don't pan out the way we hoped.
So it's like having that margin of safety, knowing that even if things go wrong,
Yes.
we have a cushion to fall back on.
Precisely. The book highlights how important it is to build that financial cushion,
Right.
to have some reserves so we can take calculated risks without jeopardizing our financial security.
So it's about having a backup plan.
Yes. And the book also emphasizes planning for the unexpected.
Right.
Life is full of surprises,
Or
both good and bad.
for sure.
We need to be prepared for things like job loss, market downturn,
Yeah.
unexpected expenses, and even those occasional windfalls.
So it's about building a solid financial foundation that can weather whatever storms life throws our way.
Exactly. And the book argues that feeling financially secure is vital, not just for our material well-being, but for our mental and emotional well-being as well.
Because when we feel secure financially,
Yeah.
we're less likely to make those like impulsive decisions based on fear or scarcity.
Right.
We can kind of approach our finances with a clearer head and a calmer heart.
Absolutely. That sense of security gives us the freedom to think more rationally, to make more thoughtful choices, and even to take, those calculated risks without feeling like we're putting everything on the line.
Okay, I'm really seeing how that foundation of like financial security can create like a sense of freedom and confidence and, allowing us to pursue our goals and live like a more fulfilling life. But here's a question that's been kind of swirling around in my mind.
Okay.
What about luck?
Luck?
What role does luck play in all of this?
That's a great question. And the book doesn't shy away from it.
Okay.
In fact, it argues that luck plays a much bigger role in our financial lives than we often acknowledge.
So it's not just about what we do,
Right.
but about what happens to us.
To a large extent, yes.
Yeah.
The book points out how many factors that contribute to financial success, like where we were born, the economic conditions during our working years, the timing of the market, are largely outside of our control.
So we could do everything right and still end up struggling financially.
It's definitely possible. And conversely, we could make some mistakes along the way.
Right.
And still end up doing well.
That's both humbling and like a little unsettling.
It is, yeah. But the book encourages us to acknowledge the role of luck.
Okay.
Both good and bad.
Right.
It's not about dismissing the importance of hard work, smart decisions, and all the things we can control.
Right.
But recognizing that we don't have complete control over our financial destiny.
So it's about being grateful for that good fortune that comes our way and not beating ourselves up when things don't go as planned.
Exactly. And recognizing that luck can change.
Right.
What worked for us in the past might not work in the future.
Yeah.
And what seems like bad luck today
Yeah.
might turn out to be a blessing in disguise down the road.
It's like we need to be adaptable
Yeah.
and resilient,
Yes.
willing to adjust our sails
Yes.
as the winds change.
That's a great way to put it. Yeah, the book really emphasizes the importance of having that long-term perspective, riding out the ups and downs, not giving up on your goals just because you hit a few bumps in the road. But how do we reconcile this idea of luck with, the importance of personal responsibility?
That's a great question. If so much of our financial success is like determined by factors outside our control,
Yeah.
why even bother trying?
That's where the book gets really thought-provoking.
Yeah.
It argues that while we can't control everything, we can control how we respond to the things that happen to us.
So it's about focusing on what we can control, even when it feels like we're at the mercy of these external forces.
Exactly. The book encourages us to develop a sense of agency, even in the face of uncertainty.
Can you give me an example of like what that might look like?
Sure. Imagine you lose your job unexpectedly. Terrible feeling.
Yeah.
Easy to fall into a spiral of self-pity and blame, but you have a choice. You can either wallow in those feelings and allow them to kind of paralyze you, or you can take ownership of the situation. You could update your resume, network with people in your field, start looking for new opportunities.
So it's about taking action, even when it feels like everything is working against us.
Exactly. And that proactive approach applies to all areas of our finances. We can't control the market, but we can control how much we save, how we invest, how we manage debt.
That's empowering. But I'm curious, how do we know if we're taking the right risks? It seems like there's a really delicate balance between like being prudent and being too cautious.
It is a balancing act. And the book doesn't give any like hard and fast rules. The right level of risk is different for everyone, depending on factors like your financial goals, your time horizon, your risk tolerance, even your personality.
So it's very personal decision.
It is, absolutely. The book encourages you to reflect on your own values and priorities when making those decisions, rather than blindly following conventional wisdom or someone else's advice.
It's about figuring out what works best for you, not for everybody else.
Exactly. That's the beauty of personal finance. It's personal. There's no one-size-fits-all approach. The most important thing is finding a strategy that aligns with your own unique circumstances and goals. But then how do we know if we're on the right track? With all the conflicting information out there, it can be so hard to know what to believe.
That's the thing. It's just overwhelming sometimes. Like, how do you wade through all of that?
It definitely can be. The book doesn't claim to have all the answers. But it does offer some guiding principles. One is to focus on the long term. It's so easy to get caught up in the daily market fluctuations, but the real key to success is making choices that will benefit you over decades, not days or weeks.
So keep your eyes on that long-term prize, even when that short-term noise gets really loud.
Exactly. The book also reminds us that building wealth takes time. There's no magic formula or get-rich-quick scheme. It's about consistently making those smart choices over the long haul.
It's about the slow and steady approach, like we were talking about earlier.
And the book also makes this point, that financial success isn't just about the numbers. It's about how we feel, about our money.
So it's not just about like financial security, but also about a sense of like well-being and contentment.
Exactly. The book argues that money is a tool. And like any tool, it can be used for good or for ill. It's up to us to decide how we want to use it to create a life that's both financially secure and personally fulfilling.
I love that. But let's talk about a specific aspect of well-being that's often overlooked when we talk about money: control over our time.
Yes. The book makes a really compelling case for this idea that the greatest dividend money can pay is freedom. Freedom to do what you want, when you want, with who you want, for as long as you want.
And that freedom comes from having like financial independence, right?
Exactly. When you're financially independent, you're not chained to a job you hate or a lifestyle that doesn't fit your values. You have the option to pursue your passions, spend time with loved ones, and make choices based on what truly matters to you, not just what your bank account dictates.
That's a beautiful vision. But, for a lot of people, financial independence feels like an impossible dream, especially in the world
Yeah,
today.
it can feel that way. But the book emphasizes that financial independence isn't about being wildly rich.
Oh, okay.
It's about having enough to cover your essential needs
Hmm.
and live a life aligned with your values. And that's something that most people can achieve with a bit of planning
Right.
and discipline.
So it's about reframing our thinking. Instead of focusing on, like,
Yeah.
I need to make a lot of money,
Yeah.
it's more about, like, I need enough to live a life that I love.
Exactly.
Yeah.
And it's important to remember that financial independence is a journey,
Mm-hmm.
not a destination. It's about making those conscious choices every day to align your spending with your values and your long-term goals.
So it's about being mindful of our spending habits and making sure that they're, like, supporting our vision for the future.
Yeah.
But this brings up something I think a lot of people struggle with:
Okay.
delaying gratification.
Yes.
It's hard to say no
Yeah.
to that new gadget or that vacation when we're constantly bombarded with these messages about, like, instant gratification.
It's definitely a challenge in our culture.
Yeah.
But the book makes a strong case for delaying gratification as a key ingredient to long-term financial success.
Yeah.
It's about recognizing that today's choices have consequences tomorrow. By sacrificing a little now, we can create a much more abundant
Yeah.
and fulfilling future.
It's like playing that long game,
Yeah.
right? Making those short-term sacrifices for that long-term gain.
Exactly. The book encourages us to think of our future selves as our most important investment. By making choices that benefit our future self,
Right.
we're setting ourselves up for a life with more freedom, security, and happiness.
That's such a powerful way to think about it. We're not just managing money, we're investing in, like, our future happiness.
I love that. It really gets to the heart of what the book is about.
Yeah.
It's not just about accumulating wealth. It's about using money as a tool
Right.
to create a life we love.
Okay. That's really inspiring.
Yeah.
But let's be realistic.
Right.
Things don't always go according to plan. Even when we're, like, doing everything right,
Yeah.
sometimes things go wrong.
That's true. Life is unpredictable.
Right.
And even the best laid plans can get derailed.
Mm.
But the book offers some great advice
Okay.
for navigating those inevitable setbacks.
It's like, how do we, like, roll with the punches?
Well, remember that margin of safety we were talking about earlier?
Mhm.
It's not just about risk.
Right.
It applies to all aspects of our finances.
Yeah.
Having that financial cushion can prevent us from being completely thrown off course if something unexpected
Happens.
So it's about having that safety net so we're not, like, starting from scratch every time something goes wrong.
Exactly. The book also talks about being flexible and adaptable. Sometimes things don't go as planned,
Right.
and we need to be able to adjust our course.
So having a plan B and maybe even a plan C.
Absolutely. The book really stresses having multiple paths to our goals, so we're not completely reliant
Right.
on any single outcome. But what about when things go really wrong? Like those major financial setbacks?
Yeah.
That can feel devastating.
Right, dude.
How do we recover from those?
That's what I'm wondering. It's easy to say, be resilient,
Right.
but it's much harder to do when you're, like, stressed and anxious
Yeah.
about your finances.
It is hard. And the book acknowledges that those financial setbacks can take a huge toll on our emotional well-being.
Yeah.
It encourages us to, reach out for support,
Yeah.
talk to someone we trust about how we're feeling. So don't isolate yourself. Reach out to friends, family, a therapist, a financial advisor.
Yeah.
Talking about it can help.
Exactly. The book also emphasizes self-care.
Yeah.
When you're going through a rough time financially, it's more important than ever to take care of your physical, mental, and emotional health.
So things like eating well,
Yeah.
getting enough sleep,
Yeah.
exercising, doing things you enjoy,
Yeah.
those can actually help you
Yeah.
navigate those financial challenges.
Absolutely. Taking care of yourself gives you the strength and the resilience
Yeah.
to kind of work through those difficulties. The book also reminds us that our self-worth is not tied to our net worth.
That's a really important reminder. It's easy to let our financial situation kind of define us,
Yeah.
but our worth as human beings goes far beyond our bank account.
Right. We're so much more than our financial status.
Yeah.
And that brings us to another key theme, defining success on our own terms.
Tell me more about that.
The book points out how we often get caught up in these external markers of success. The big house,
Right.
the fancy car,
Yeah.
the prestigious job title. but those might not actually align with what truly matters to us.
So it's about getting clear on our own personal definition of success.
Yes.
Not letting society kind of dictate it for us.
Exactly. The book challenges us to ask ourselves
Mm-hmm.
what we truly value, what brings us joy, what kind of legacy we want to leave behind.
So it's about living a life that feels authentic to who we are.
Yeah.
Not trying to keep up with some external standard of success.
Absolutely. And that authenticity extends to our financial decisions. There's no single right way to manage money. What matters most is finding an approach that aligns with your values, your goals,
Right.
and your vision for the future.
It's about forging your own path, not blindly following the crowd.
Exactly. And that path might involve some experimentation,
Okay.
try different approaches, be willing to kind of adjust your strategy
Yeah.
as you learn and grow. It's all part of the journey.
So even when it comes to something as seemingly rigid
Yeah.
as money,
Yeah.
there's room for flexibility and growth.
Absolutely. And that's where learning from others can be so valuable.
I'm always open to learning from others' experiences. What does the book say about that?
It argues that we can glean incredible insights from the experiences of others, both those who've achieved great success
Mm-hmm.
and those who've made costly mistakes.
So it's about learning from both, like the triumphs
Yeah.
and the failures of others?
Exactly. The book is filled with these stories, from the inspiring tale of Ronald Reed, the janitor who quietly amassed millions,
Right.
to the cautionary tale of Rajat Gupta,
Yeah.
the successful businessman who risked it all for more.
Right.
These stories remind us that we're not alone on this journey,
Mm-hmm.
and we can learn from the wisdom and the missteps
Yeah.
of those who've gone before us.
It's like having a roadmap, but also a cautionary tale,
Yeah.
all in one. But with all the information and advice out there, how do we know who to trust? It's so easy to get lost in the noise.
It is. And the book offers some guidance. It suggests looking for advisors
Okay.
who have a fiduciary duty to act at your best interest.
So people who are legally obligated to put
Yeah.
your needs
Yes.
ahead of their own profit.
Exactly. And be wary of anyone promising guaranteed returns
Right.
or easy money.
It's like if it sounds too good to be true,
Yeah.
it probably is.
Right. The book also reminds us that the best financial advice is often the simplest.
Okay.
Save consistently. Invest for the long term.
Mm-hmm.
Avoid unnecessary debt. It's about sticking to the fundamentals.
It's so easy to get caught up in all the complex strategies and financial products out there.
Right.
But sometimes the most effective approach is also the most straightforward. But what about when all of this just feels overwhelming? Like when there's so much to learn and so many decisions to make, it's easy to get stuck in analysis paralysis.
I completely understand that feeling.
Yeah.
The book acknowledges it too.
Okay.
It suggests breaking down your financial goals into smaller,
Right.
more manageable steps.
So not trying to tackle everything at once.
Exactly. Focus on one or two key areas.
Mm-hmm.
Building an emergency fund, paying off debt,
Mm-hmm.
starting to invest, whatever feels
Right.
most pressing.
It's like creating that sense of momentum
Yeah.
by knocking out those smaller goals first.
Yes.
It feels less daunting that way.
Right. And don't forget to celebrate your progress along the way.
Yeah.
It's so easy to just focus on
Yeah.
what we haven't achieved,
Right.
but it's so important to acknowledge those wins,
Right.
big and small.
So give yourself credit for the progress you're making,
Yes.
even when it feels slow.
Exactly.
Mm-hmm.
The book argues that celebrating those wins
Yeah.
helps to keep you motivated
Yeah.
and reminds you that
Yeah.
you're making progress towards your goals.
That's a great reminder. But let's talk about something that's often seen as kind of a taboo topic. The role of money in our relationships.
Yes. Money can be a source of both joy and conflict in relationships.
Oh, yeah.
But the book offers some valuable insights for navigating those complexities.
Like what? How do we do it?
First, open and honest communication with your partner
Okay.
about your financial goals, your spending habits,
Mm-hmm.
your attitudes toward money.
So clear the air.
Yes.
Get everything out in the open.
Exactly. And then work together to develop a shared vision for your financial future. What do you want your financial life to look like in 5 years, 10 years? What are your priorities as a couple?
Hmm.
What are your shared goals?
So it's about creating that sense of like partnership
Yes,
and shared responsibility.
absolutely.
Yeah.
The book argues that when couples are on the same page financially,
Yeah.
it strengthens their relationship and
Nice.
reduces stress
Yeah.
and conflict.
That makes sense. But what about couples who have very different approaches to money?
Yeah.
I mean, it's pretty common, right, for one person to be more of a saver and the
Yeah.
other person to be more of a spender.
It is. And the book acknowledges that those differences can be challenging,
Right.
but it also offers some suggestions for finding common ground.
Okay.
First, compromise.
Yeah.
It's not about one person always getting their way. It's about finding solutions
Yeah.
that work for both partners.
So finding that like middle ground
Yeah.
that respects
Yeah.
both perspectives.
Exactly. And if those differences are causing a lot of conflict, seeking professional help from a financial therapist
Okay.
or a counselor can be incredibly helpful.
So it's okay to ask for help
Yeah.
when those like money conversations
Yeah.
become too difficult to like navigate on your own.
Absolutely.
Yeah.
There's no shame in seeking outside support, especially when it comes to something as important as your financial well-being and the health of your relationship.
Okay, well, that's reassuring. But let's dive into a concept that's often seen as kind of controversial, but it's so central to this book, this idea of enough.
Ah, yes. The concept of enough is really at the heart of this book's message.
Yeah.
It's this idea that at some point,
Mm-hmm.
we need to stop chasing more and more money
Yeah.
and instead focus on living a life that's rich in experiences, relationships, and personal fulfillment.
So it's about recognizing that money is a means to an end, not the end itself.
Exactly. The
Thanks.
book makes a powerful argument that, beyond a certain point,
Yeah.
more money doesn't necessarily lead to more happiness or fulfillment. In fact,
Right.
it can sometimes lead to more stress,
Yeah.
anxiety,
Yeah.
and a sense of emptiness.
So it's about finding that sweet spot where you have enough to like live comfortably and pursue your goals, but not so much that you get caught in this like trap of constantly wanting more.
Exactly. The book encourages you to define your own version of enough based on your values, your goals, and your vision for the future.
So it's a very like personal decision.
It is. And the book reminds us there's no one right answer to this question of how much is enough.
Yeah.
What matters most is finding a level of financial security that allows you to live a life that feels meaningful and fulfilling.
That makes sense. But how do you know when you've reached enough?
Yeah.
It's easy to get caught up in like the comparison game,
Yeah.
always feeling like you need more.
That's the challenge, isn't it?
Yeah.
The book suggests tuning out that external noise and focusing on your own internal compass.
Okay.
Ask yourself, what makes you truly happy?
Yeah.
What brings you joy? What are you grateful for?
So it's about shifting your focus from like what you lack to what you have.
Exactly. And the book also encourages the practice of gratitude.
Hmm.
When you're grateful for what you already have,
Yeah.
you're less likely to feel like you need more.
It's about like appreciating the abundance in your life,
Yeah.
both material and non-material.
Right. Gratitude can be a powerful antidote
Yeah.
to that constant craving
Right.
for more, more, more. But even when you have that sense of enough,
Yeah.
there's still this persistent societal narrative
Right.
that more money equals more success.
Yeah. It's like that message is everywhere. It's hard to escape.
It is pervasive.
Yeah.
And that's why the book's message about defining success on your own terms is so important.
It's about breaking free from that like external definition of success and creating a vision that aligns with your own values and priorities.
Exactly. It's about recognizing that true success is about living a life that feels meaningful and fulfilling, not just accumulating wealth for the sake of it.
I think that's a great place to kind of pause for now. This has been a lot to process.
It has, and we've only just scratched the surface.
I know, right?
There's still so much to unpack in this book.
Okay. So for those of you who are intrigued by this, like exploration of the often hidden forces that shape our financial lives, I highly recommend checking out The Psychology of Money by Morgan Housel.
It's a book that can change the way you think about money and maybe even change your life.
That's awesome. And on that note, thanks for joining us for this deep dive.
Yes, thanks for having me.
We'll be back next time with another fascinating exploration of the ideas that are shaping our world.